Hey everyone, welcome back to Corporate Decoder. Today we are pulling back the curtain on Guggenheim Strategy Funds Trust. And let me tell you, this report is packed with enough numbers to make your head spin, but we're going to decode it for you. This is essentially a shareholders report for registered investment companies. Think of it as a yearly checkup for Guggenheim's investment funds, shining a light on how they performed, what they invested in, and yes, how much it all cost. Let's first look at Guggenheim Strategy Fund II for the year ending the 30th of September 2025. This fund returned a solid 5.95%. That is actually pretty good, especially when you compare it to its benchmarks. The Bloomberg US Aggregate Bond Index, which is a big deal in the bond world, returned only 2.88%, and the Bloomberg 1 to 3 month US Treasury Bill Index, which is super safe, returned 4.47%. So yeah, this fund did better than both of them. Now, about the cost for every $10,000 invested, it cost about $18 for the year. That translates to just 0.17%. That is incredibly low, especially if you consider the complex investments that might be involved. It means most of your money is actually working for you, not being eaten up by fees. So how did they pull off that good performance? The report says it was mostly from carry, which is basically the income earned from the investments, but it was held back a bit because interest rates went up. Think of it like this: the fund earned money from its holdings, but the value of those holdings went down a little because borrowing money became more expensive. Some of their bets on things like mortgage-backed securities did not work out as well, but other bets on corporate debt helped a bit. Let's peek at what they invested in. The report shows their top holdings. BX Commercial Mortgage Trust is their biggest single investment at 2.8%, followed closely by JP Morgan Chase Commercial Mortgage Securities Trust, also at 2.8%. This tells us they are heavily invested in real estate-backed financial products. Now, let's switch gears to Guggenheim Strategy Fund III. This fund also had a good year, returning 5.91%. Again, this is better than the Bloomberg US Aggregate Bond Index and the Treasury Bill Index. And the costs here are even lower at just $14 for every 10,000 invested, or 0.14%. Incredible efficiency. The reasons for performance here are very similar to Fund II. They made money from what is called carry, but lost some value as interest rates climbed. Their investments in things like asset-backed securities and mortgage products caused some issues, but other investments helped to offset that. Looking at their top investments, First Homes Trust is their largest at 2.8%, followed by BX Commercial Mortgage Trust at 2.6%. A similar story of investing in mortgage and real estate related assets. Finally, let's look at Guggenheim Variable Insurance Strategy Fund III. This one returned 5.76%. It also beat the two main indexes. Here the costs are a bit higher because it is designed for variable annuities, which often have more layers of fees. For a $10,000 investment, it cost about $41, or 0.40%. Still not bad, but higher than the other two. The drivers of performance are again very similar to the other funds. They earned income from their holdings, but lost a bit as interest rates rose. Their investments in mortgage and asset-backed securities also took a small hit, but overall it was a positive year. The total investments across these funds are substantial. Guggenheim Strategy Fund III has about $127 million in net assets. Strategy Fund III has around $128 million. And the Variable Insurance Strategy Fund III, which is smaller, has about $31 million in net assets. These funds are heavily invested in what is called collateralized mortgage obligations. For Strategy Fund II, this makes up 34.4% of what they own. For Strategy Fund III, it is a big 36.5%. And for the Variable Insurance Strategy Fund III, it is a massive 54.4%. Basically, they are betting a lot on the housing market indirectly through these complex financial products. Beyond those mortgage investments, they also have significant holdings in interest rate swap agreements, ranging from about 43% in Fund II up to nearly 48% in Fund III. These are essentially contracts where they trade interest rate payments. It is a way to manage risk or make specific market bets, which can add complexity but also potentially boost returns. Let's quickly touch on the audit fees for the year ending September 2025. The auditors billed around $131,000 for Strategy Fund at about $118,000 for the prior year. Tax fees were also around $30,000. This tells us they are spending money on professional services to ensure everything is above board, which is a good thing. Now for my take, these Guggenheim funds, especially Fund II and Fund III, have shown pretty impressive returns, outperforming the major bond indexes. The super low expense ratios are a huge plus, meaning more money stays in investors' pockets. The concentration in mortgage-related assets and interest rate swaps is definitely a key strategy, but also a potential risk. If the housing market or interest rate environment shifts dramatically, these funds could see significant swings. The fact that they use independent pricing services and have rigorous accounting oversight is reassuring though. The Variable Insurance Strategy Fund III, while also performing well, comes with higher costs due to its use within annuities. This is common in the variable annuity world, but it is something investors should always be aware of. Overall, Guggenheim seems to be managing these funds quite effectively given the market conditions. The strategy is clearly focused on income generation through sophisticated financial instruments. The biggest risk for investors is likely the complexity of these holdings and the potential for volatility if the underlying markets move unfavorably. But for those comfortable with that level of complexity, the low fees and strong recent performance are certainly attractive. Alright, that is our deep dive into the Guggenheim Strategy Funds Trust Report. What's your take on these investment strategies and their performance? Let me know your thoughts in the comments below. If you found this decode valuable, please give it a thumbs up and subscribe for more of these breakdowns. And remember, our Discord community is linked in the description for even more insights and discussion. Thanks for tuning in, and I'll see you in the next video.